Well, NTPC is set to declare its results. It's going to be an interesting quarter as far as power companies are concerned, and it's going to be interesting to track the performance of how exactly power companies have fared, especially when you're talking about the quarter gone by that was marred by multiple one-offs, including the second wave of the COVID virus. Now, when you're talking about the core numbers to keep an eye out for, revenues are seen up by almost 8%, coming in close to the 25,200 crore mark. EBITDA is seen at a little northward of 7,830 crore mark. Margins are seen around 31% this time around, and profitability is seen up almost 42%, little above 3,500 crore mark. Now, when you're talking about the key highlights of the quarter gone by, higher coal availability has actually led to better plant availability factors. Regulated nature of the business is expected to protect the margins, and when I'm talking about the PLF trends, it's expected to see significant improvement, at least on a year-on-year basis. QOQ, you may see some marring given the fact that apart from the last month of the quarter, there was significant business disruption. Now, when you're talking about FY21, remember, NTPC Group commercialized close to 3.4 gigawatts, and the company has also revised upwards its renewable energy capacity guidance to almost 60 gigawatts by FY32. Higher availability and generation on account of higher demand is something that is being expected. Now, when you're talking about key factors to keep an eye out for, regulated equity trends, renewable plans and the update that the company is trying to give, trends on renewables and the company management's commentary on the same, and when you're talking about commercialization, what are the trends over there? Very important to track. Now, remember, in the quarter gone by, despite COVID, despite wave 2 worries, a lot of companies actually saw power demand go up. Power demand actually hit intraday highs, or you could call it a new high as far as demand is concerned. Demand, however, was impacted due to lockdown. Post easing of the lockdown, demand crossed all-time highs several times June 2021 onwards. Merchant volumes and prices both were higher as far as the quarter gone by is concerned. NTPC, remember, had revised its renewable energy capacity target. It's going to be very interesting to see how the renewable energy plays actually fare, given the fact that so many companies, so many corporates are investing significant capex in order to increase their renewable energy plans, and given the fact that a lot of renewable energy prices in terms of solar, wind tariffs are actually quite low, it's going to be important to see how is it that the companies sustain their business model, especially in that backdrop. Given the fact that NTPC2 is becoming quite aggressive, commercialization, monetization of their assets is going to be very important to keep an eye out for. Remember, NTPC has a regulated business nature, so the earnings are not expected to be impacted to the same extent that other companies could be due to the COVID virus.